In this tutorial, what we're going to take a look at is trying to identify a useful trend gate so that we're trading in the direction of the trend and not taking those trades where we might be trading against the trend, which leads to mistakes, leads to small losses, getting whipsawed and those type of things. Now, you've seen it before, you've probably read plenty of books, and everyone says you should trade in the direction of the trend, but obviously it's a lot easier said than done. Now, when it comes to Forex pairs, we're a little bit fortunate because you can trade both long and short there. And I know with stocks you can as well, but it's not as common for people to trade stock short. So it's a little more practical and obvious for people to trade both long and short when it comes to Forex pairs. Now, one very common rule of thumb is to use moving averages, of course, to identify the trend, and one in particular that is used very, very frequently is a 200 period moving average. So let's just place a 200 period moving average on. It's a simple moving average, and you'll notice that I've already got the 100 period moving average on the chart as well. Now, as you already know, moving averages are very slow to move. They're very slow to react, and so if we were to trade in the direction of the trend, let's just take the Aussie dollar example. It started to turn down at this point where it hit the first lower high, and then it was in a broken several support lines, certainly several trend line support lines, and then a major support line through there, yet the 200 period moving average was still trending up. And it didn't start to turn over until about this point here. So that 200 period moving average would have really kept you into some trades long when the market was in fact in a short to medium term downtrend. So one method you might want to consider is using a 100 period moving average. I'm just going to remove the 200 for now. Let me just delete that. And we'll leave the 100 period moving average. Now, one thing you might want to consider, and you might want to test across multiple time frames as well, and I do actually apply it across multiple time frames across stocks and Forex and indices, is the 100 period moving average. And all we want to see is that the 100 period moving average is rising or falling today compared to yesterday. Now that helps us determine what direction we should trade in. So this is what people might refer to as a trend gate, where you're actually using a gate to stop you from getting in or out of trades depending on which way you're trading. So in this case, we've got a 100 period moving average. So as it's turning down, the rule of thumb would be we only trade short during that period of time. So obviously you'd have other entry criteria that you would have going on, but the whole idea is to try and avoid those trades where they're minimal upside potential and the odds are more towards the downside. So you can see through this phase through here, yeah, the market did break up, but it didn't break up a lot. As it broke out, it was only a momentary breakout before it resumed back into at least a consolidation, but the medium to longer term downtrend here was in place. So we've got that on the daily chart, but if we were to flick across to the hourly chart, the same sort of rule applies. Let me just remove that there. So through many phases through here, you can see how consolidatory it is. It's really been going in a sideways trend through there. But at this point through here, you don't want to be trading long. So it is just a gate that stops you from getting long during these downtrends, because yeah, you probably could make money on the long side through there, but it's very short-lived. So you want to make sure you're trading on the direction of the trend, and that is why so many books suggest that you do in fact trade in the direction of the trend. Now, it is good, as you can see, it does work across multiple time frames, the hourly, daily, but you might want to play around with the different time frames to make sure it suits your style. So as you can see through this phase through here, it is trending down, so you'd want to be looking to trade short, and you'd use other entry criteria on that. You might use an overbought indicator like an RSI or a stochastic, or you might place Bollinger Bands on it, depending on how you trade and the time frame you're looking to capture will determine how you coincide this indicator with some other entry criteria there. Now, I wouldn't mind just having a look at Bitcoin, because Bitcoin has been in a downtrend, and if we're on the daily chart, you'll notice through this phase through here, the highs have been getting lower and the lows have been getting lower as well, all through there. So with this 100 period moving average, no matter if you're very bullish or excited about Bitcoin or excited about whichever currency pair, gold or copper perhaps, or any other commodity, Forex pair, indice, it doesn't really matter. Once you put a trend gate on there, it helps you keep out of those that might not have the best risk reward for what you might be looking for there. Now, of course, as a reversal trader, it might be absolutely essential that you do trade against a trend and you've got a system that enables you to do that. However, as you can see through here, you wouldn't want to be trading Bitcoin long at any stage through there because the 100-period moving average has been falling today versus yesterday in every scenario through there. So once again, it looks like it could be consolidating through here, and if it does break up, we might see an uptrend, and some of you might use price action trading in order to complement a trend gate such as this. So hopefully that gives you some good information about using maybe a trend gate when trading forex indices or cryptocurrencies or even commodities. And if you like this video, then please give it the thumbs up and be sure to subscribe to the channel. Thank you.